Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the weekly time frame, where we look for a 5-wave impulsive structure to the upside, currently working on the yellow wave 3. Inside wave 3, we then have the lower degree green count 1, 2, 3, 4, 5. Preferably your wave 4 is finished and you look for a wave 5 to the upside. The common target area for your wave 5 is between 75.9k and 110.6k, which of course is a very big area, and therefore the lower time frame counts are going to be very important to get a more specific target area for that wave 5. The probabilities in general in this range are higher to move to the upside, also supported by the probabilities that the 886 is giving us. You can see here that in this range we have touched two 886 Fibonacci's. The first 886 was taken from this high to the low, increasing the probabilities that any move to the downside is a corrective structure, as the 886 is rare for a wave 2, common for a wave B or a wave X, increasing probabilities any move down is a wave C or a wave Y, which in turn increases the probabilities to go back up at a later stage and take out the all-time high. Now price made that low, moved towards the upside and hit the 886 once again, taken from the high to the low that we have at 56k. This again increases probabilities. Any move down is a wave C or a wave Y, increasing the probabilities even more to continue the trend to the upside and take out the all-time high. If the low of your wave 4 on the weekly time frame is in and we are looking for price to move to the upside for that wave 5, then we want to count impulsive structures on the 4-hour time frame. Here we have an impulse 1, 2, 3, 4 and a wave 5 to the upside. The common target for your wave 5 is between 73.4k and 76.9k. The invalidation for this scenario is price moving to the downside as long as it doesn't take the high of wave 3, hitting a 65.5k, which is the high of wave 1, because in an impulse wave 1 and wave 4 are not allowed to overlap. An interesting question is, where did this wave 4 actually end? At the low over here, the higher low, or the higher low of the most recent range? Now this is something that I will cover in a lot of detail in the live stream that is coming up later today, where we're going to have a look at all of the different corrective structures inside this range and then get a good feel of the probabilities and also what you have to look out for. Now the bearish scenario on the daily time frame is a move to the downside, but that move to the downside is then regarded as a bigger wave 2. Finished wave 1 to the upside, looking for a 3-wave corrective structure in 2, and then a bigger wave 3 to the upside, after which we then look for a wave 4 and a wave 5. The common target for your wave 2 is between the 05 and the 786, 64.2k, 59.8k. The 382 is uncommon at 66k and the 886 is rare at 58.2k. The most bullish scenario, however, is a multi 1-2, where inside this range we don't have corrective structures, but we actually have two impulsive structures. We have a 1-2, 1-2, 1-2, and we look for another move to the upside in again 1-2 continuation to the upside. In this scenario, your blue wave 2 finished here after a 3-wave corrective structure to the downside, and then we have another wave 1, wave 2, and look for continuation. However, what lowers the probabilities for this scenario is that this white wave 2 touched the 886, taken from the low to the high of wave 1, which is a very rare target for wave 2. Also, on the lower time frames, this wave 1 over here does count better as a 3-wave ABC to the upside compared to this being an impulsive structure. Therefore, the alternative would be better for this wave 2 to move to the right side over here. However, that means we get back to the question of where this range actually ended, because inside wave 2 you cannot have a triangle structure. That is only allowed in a wave 4, and something we'll cover in the live stream later. On the 50-minute time frame, price was moving towards the downside with bearish CVD divergences, absorption of market long positions with bigger limit short positions. To increase the probabilities for price to move towards the upside for bullish continuation and take the high, we want to see some more local bullish CVD divergences. The first one was visible over here, but preferably what we're looking for is a bit of a grind to the upside, changing market structure, and see the bullish CVD divergences building just like the bearish CVDs did over here. Something to note is that at the high we do have an 886 touch taken from the high to the low over here, which does increase the probabilities for this structure to be a corrective structure and therefore sooner or later to take out the highs. You can see I also have this bullish CVD divergence on the chart, a higher low in price, a lower low on this CVD, just for the sake of explanation that I do prefer CVD divergences on the right side of the recent high. Therefore, the CVD divergences that are visible over here will have a greater importance than the one over here. If we then finally look at the probabilities of all these scenarios, then on the weekly time frame, the probabilities are higher for bullish continuation compared to any bigger bearish scenario to the downside. On the daily time frame, the probabilities are also higher for the bullish scenarios. Both of the scenarios I kind of showed are bullish anyway because they look for continuation to the upside. On the 4-hour time frame, I do pay close attention to the potential continuation of this range over here. Also next week, we have some interesting news on Wednesday, June 12th, as you can see here. So I do keep this date in mind for a potential bigger breakout at least. However, the probabilities on the 4-hour are higher for the bullish scenarios compared to the bearish scenarios at the moment, as long as we do not see any structural weakness on the chart locally. On the 15-minute time frame, we do have an 886 touch at the high, which increases probabilities to sooner or later take the high. However, we do have some bearish CVDs building with every bounce to the upside, which does add some probabilities to take that very local low on the 15-minute time frame, unless, as explained, price can invalidate the bearish CVD divergences by moving to the upside and preferably create a bit of a grind to the upside, changing market structure with some bullish CVD divergences. Probabilities will change in this range if price moves to the downside, taking out 68.5k. This will increase the probabilities for deeper retracements to the downside as one triangle scenario becomes invalidated, which I will talk about in the live stream later. Same is true with 67.2k, which invalidates another triangle scenario. And if you take the low of the range, 66.6k, then the multi-1-2 scenario shown in this video is invalidated as well, increasing the probabilities for a bigger retracement. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.